Hey, welcome back to the series on partnering in real estate and how to do it. And today's topic is really how many homes can you qualify for? If you're gonna partner up and do real estate, your credit has limitations. So the question is, how far will your credit actually go? So the first thing that you need to understand is that my credit, your credit, the President of the United States credit, all of our credit has a limit, which means banks are only comfortable lending so much to us. Now, I will tell you that if you're getting into a partnership arrangement and you're the funding partner, that means that you're bringing money or credit or both to the table. You want to be aware of how far your credit can really go. In today's financial climate, and really what it's been for quite a long time, is that banks are comfortable helping you lend on up to maybe 10 homes. You'd have to probably use a variety of different banks, but ultimately what ends up happening is that when you buy an investment property, you can imagine that that mortgage reflects on your credit, and what that does is that increases your debt to income ratio. However, you can supply the bank with the rental contract, and they'll take 75% of the income and count it against the debt. So if you have a solid cash flow on that property, it could bring it all the way back down to zero. And in the bank's eyes, they're basically saying, it's like, we see that you have a home, but you're not financially negatively impacted. In fact, often if you do it the right way, you can be positively financially impacted and actually qualify easier with every home you buy. But banks have a tolerance. They've got rapid acquisition rules on how many homes will allow you to buy it in a certain period of time. We'll have rules on whether you can buy one at a time versus two or three at a time. And ultimately, when you get to 10, most banks are going to say you're out of the game. That does not mean that you're out of the game. What it does mean is that we need at some point in the journey to bring on what I call a credit partner. Now, a credit partner is the individual that says, I got great income, I got great credit, I don't maybe have money to invest in real estate, but if you'll give me a small piece of the profits, maybe 5 or 10% on the back, maybe something a little different to incentivize me, I'll actually carry the liability of this. Well, in my specific case, my partners normally get 5% of profits, and I'll pay them a couple $1,000s on the front. So that means they get something up front, and then when the home eventually comes off their credit years later, they're also going to get a percentage of the proceeds at the time of sale. So I just want to share with you, if any of that went over your head, what it basically means is there's no limit to how much real estate you can buy. Would I give up 5 or 10% of profits to be able to continue buying as many homes as I want with the bank system? Absolutely. So I want you to be aware that that does exist. Now, let's jump into pre-qualification. Whether you are bringing someone on to partner with, or if you're going to be my partner, as the funding partner, one of the things that we need to ascertain is where are you at financially with your credit. That means we're going to put together something we call a mega file. That means one of my assistants is going to put you in touch with my banking team, and they're going to request a stack of documents, and it might take you a couple hours to track it all down. They're going to want recent mortgage statements or the last 2 years of taxes. They're going to want recent pay stubs. They're going to pull your credit. They're going to do all of these things, and what they're looking to do is not qualify you for doing an investment property. Remember, we're trying to build a huge portfolio. Right out of the gate, we can pretty much determine how many homes you'll ever be able to purchase. And can you buy one at a time, two at a time, or three at a time? One of the things that can be challenging for some people is to actually do the boring minutia. I need my partners to do this. You got to go dig in and gather up all your personal finances. Don't be worried about being judged. You need to be honest, and you want to supply everything. It is a third-party lending team. There's nothing they can do with that financial information by law. They can't sell it, they can't share it, they can't do anything. In fact, their offices are under lock and key because that information is not allowed to switch hands in any way, shape, or form. Now, if you supply all of those documents, and I would encourage you to do it as soon as possible, like that's one of those things as a partner, you can say, hey, I'm being a good partner, I'm jumping right on the bandwagon, I'm gonna supply all that. And we give it to the lending team, and what they're doing is they're looking at all the different banks that we work with. Now remember, this is a team that has done hundreds and hundreds and hundreds of millions of dollars worth of lending. This is their specialty. They're not going to treat this like a normal loan. This isn't your buddy or roommate or family member that does loans. They're not allowed into the process here because we're actually looking at a series of banks, a sequence of banks, and how to get your credit to go as far as possible. Now, after they've had your file for a few days, they're going to get back in touch and essentially say, here's how much you can buy, here's when you can buy, here's how often you can buy, here's our banks with rapid acquisition rules, here's the banks that don't care how many you have, these are the banks that have slightly lower rates versus higher rates, but they're all going to be within a similar margin of each other. And the team that I've set up to do this Basically, they charge very standard rates and they're gonna do a lot of extra work and go above and beyond to help build this portfolio. Now, a lot of people, I will pause for a moment and say, get rate conscious. I want you to understand I'm extraordinarily rate conscious, but there's something more important than being conscious about rate, and that's scoring the next deal. Imagine for a moment going with a bank that maybe has a slightly higher interest rate, maybe 0.25% higher, but they'll allow you to buy your next 4 homes when the bank with the lower interest rate wouldn't. That means that you actually can get in the game, and we're not ever going to have conversations and mincing words over 0.5% or 0.25% or 1/8%, because I want the lowest rate possible because that will give us the highest cash flow possible. But remember, if we're earning 20% ROI on a deal and the interest rate's 1/4 higher, then maybe this 20% ROI drops just a hair. You know what? Whether it's 20% or 19.5% or 20.5%, guess what? That's the big money that we're focused on. So we are going to be rate conscious, but it's more important to make sure we can buy all the real estate that we want. Now, what if we find out that you actually can't qualify? You might have as a partner money, but you may not be able to have very usable credit. Some of you might own a business and you might have a lot of write-offs. And so you might make a fantastic income, but thank goodness to our tax write-off system, it might not look like you have much. So the eyes of the bank might say, well, they can't really buy anything or they can't do very much. Don't worry. We're going to bring in a credit partner from day 1 or day 10 or day 1,000, because at some point we know credit will run out, and it's about being able to buy the next deal. That's the most important part of building wealth, to get it compounding and compounding and compounding. So in the first decade, a little can turn into a lot. In the second decade, a massive amount of money can turn into a legacy that can keep feeding generations and doing tremendous good. Listen, if you're looking at becoming my partner, thank you for watching this. If you're watching this so that you can learn how to partner with other people, I hope that this video gave you exactly what you needed. If you are going to partner with me, just remember, when the time comes to gather the financial documents for the mega file, I want you to scramble to make it a top priority, because there is some setup time before we're actually able to go out there and do real estate. And the pre-qual is one of those parts that will keep us from actually getting under contract and getting action on our very first deal. So get it in place, get it put together. And remember, if you are interested in partnering, you can talk to my team by clicking the link below. Otherwise, we'll see you on the next video.